Hello and welcome to the Daily Brief Show by Zerodha. On this show, we cut through the noise and simplify the biggest stories and trends that are shaping the stock markets. I'm your host Anurag Bansal. Today is Monday, the 2nd of September, and I have three very interesting stories for you. By the way, you can find us on Spotify, Apple Podcasts, or wherever you consume your podcasts. If you prefer video instead, you can also listen along with interesting charts on YouTube. And if you like reading instead of watching or listening, you can subscribe to our no spam newsletter via Substack. All the links are mentioned in the description below. So let's start with the stories. In the first story today, I talk about the lab-grown diamonds industry. Then in the second story, I move on and discuss about what is happening with the new UPI regulations in the country. And in the final third story, I talk about an update on the WazirX hack that took place last month. So let's begin. See, Ajoy Chawla, who's the CEO of Tanishq, which is India's largest jewelry brand, recently told NDTV Profit that lab-grown diamonds are not a big deal for them. Apparently, they sell a lot of diamond jewelry to youngsters and Gen Z, so lab-grown diamonds are not really on their radar. And that is what I'm going to talk about today, lab-grown diamonds. Even in the recent earnings call, when they were asked about consumer interest in lab-grown diamonds or LGDs, Ajoy Chawla said,
So we've been tracking, this is Ajay here. We've been trying to track the inquiries on a continuous basis across all the stores, Tanishq, Carrot Lane, Mia, Zoya. Zoya, there's of course very few. And so far, we have not seen material, inquiries. What we do hear about is that customers want to know, they're a little more curious, and they want to be assured that what we are selling, is it natural, has it got any lab, etc. There are some questions, and some of them have even gone on to demand that, can you please certify that yours is entirely natural, etc. We've had to do that, and we've gone ahead and done that.
Now, lab-grown diamonds have become really popular over the last 5 to 10 years. And when jewelers start talking about it seriously, you know there is something happening there. So let me start with the basics. See, the difference between a natural diamond and a lab-grown diamond is simple. Real diamonds are formed over billions of years under high pressure, high temperature conditions deep within the earth, and they are mined, processed, and sold. Now, lab-grown diamonds, on the other hand, are created in controlled laboratory environments using processes that simulate natural conditions under which diamonds are formed. Now, these processes can take a few weeks to several months as well, but lab-grown diamonds are more affordable because of lower production costs. Mining real diamonds has a negative economic footprint, and these lab-grown diamonds are much more sustainable as compared to them. But how did lab-grown diamonds even come into existence, you might be wondering? Look, I'll give you a short story. Look, in the 1950s, the first synthetic or lab-grown diamonds were created for industrial use, and they were created because of their hardness and thermal conductivity. But these diamonds were very low in quality and not suitable for jewelry. But fast forward to the 2000s, with advancements in technology, the quality improved significantly and production costs dropped by around 90%. Now, colorless lab-grown diamonds, which by the way are of the highest quality, are suitable for jewelry, and they started becoming commercially available, and since then the market has been expanding quite a lot. Now, here is something interesting again. Industry experts say that the retail side of India's lab-grown diamond market is currently around $300 million US, and it could reach $1 billion US in just the next 2 years. And get this, India has a 25% market share in production. According to Jefferies, global lab-grown diamonds market has expanded very rapidly, and it has grown 4x in volume from 2018 to 2022. This growth is mainly driven by affordability. Talking about India specifically, lab-grown diamond exports have jumped 8-fold in 4 years to $1.7 billion in FY 2023. The United States remains the largest market though, and they account for more than 75% of global volumes. Apparently, lab-grown diamonds now have a 10% market share in the engagement ring market. Now, over here, I'm sure there are two things most of us are curious to know. First, what is the price difference between a natural diamond and a lab-grown diamond? And more importantly, what is the resale value of lab-grown diamonds? Look, on the price front, Jeffrey says that lab-grown diamonds are significantly cheaper than natural diamonds due to lower production costs. In 2016, lab-grown diamonds were about 15% cheaper than natural ones, but this discount has since widened to about 75% today. To give you a sense, a good quality 1 carat natural round diamond costs at least 2.5 lakh rupees. On the other hand, a similar lab-grown diamond of the same size and characteristics can be bought for approximately 40 to 50,000. Now that is quite a big difference. As for the resale value, you might have guessed it. Lab-grown diamonds generally have a lower resale value than natural diamonds for obvious reasons. Natural diamonds are often considered a store of value due to their rarity and limited supply, but on the other hand, lab-grown diamonds have unlimited supply, so they are not as valuable as natural diamonds. But here is the thing, with luxury jewelry, there is a lot of psychology at play. Natural diamonds are often associated with tradition, luxury, and long-term value, which makes them very popular for special occasions like weddings and engagements. They have emotional value, and the scarcity of diamonds only adds to this value. Lab-grown diamonds, on the other hand, are more affordable, sustainable, and appealing to younger, environmentally conscious consumers who prioritize costs over everything else. So maybe they'll be looked a little differently and more as fashion items in the future. So now the next question is, what are the top jewelers doing to get a piece of this growing pie? Well, as I mentioned earlier, Tanishq, which is the largest jewelry player in India, is not even looking to get into this space directly. But here is an interesting tidbit. Titan, who's the owner of Tanishq, had invested about 20 million US dollars in Great Heights Incorporated, which is a US based company and the owner of Clean Origin lab grown diamond brands. Maybe this is their way of keeping a foot in the door and gaining insights into the growing lab grown diamonds market. Kalyan Jewelers, on the other hand, which is another big player, says that they have seen little to no demand for lab grown diamonds. They are also concerned about price instability. That is, if lab grown diamond prices drop significantly, it could damage customer trust in their brand. Senco Gold, on the other hand, have taken a very different approach. They have launched a sub-brand and are conducting pilot tests in selected stores to understand consumer behavior and responses to lab-grown diamonds. In their latest earnings call, Senco Gold noted that while natural diamonds are seen as rare and luxurious, lab-grown diamonds, on the other hand, are gaining traction today, especially for larger stones due to their lower price. Senco sees lab-grown diamonds as more suitable for fashion and daily wear items where cost is a significant factor. Natural diamonds, however, remain preferred for special occasions like wedding even today. On a lighter note though, I came across this line today that sums things up pretty well. Chemically speaking, diamonds are 100% carbon. Commercially speaking though, they are 100% marketing. Isn't it fascinating how technology is shaking up even the most traditional industries? The diamond market is definitely something to watch out in the coming years. Moving on to the next story of the day, let's talk about UPI and the new norms surrounding it. Look, UPI is huge in India, as you already know. Just last year, Indians used UPI to make payments worth over 20 lakh crore rupees. But there has been some unfinished drama in this space. On one side is the government, which is trying to put a 30% market share cap on third-party UPI apps. They are trying to reduce concentration risk and encouraging competition. On the other hand, though, third-party UPI players like PhonePe and Google Pay are worried that this cap will stop them from growing even if they offer the best experiences to users. And honestly speaking, this seems like quite a fair concern. Now, this entire drama started in November 2020 when NPCI, or the National Payments Corporation of India, proposed to limit the market share of a single app at 30%. They initially set a deadline of December 2022 to make a decision, but then they extended it by 2 years to December 2024. Now the question is, why is the government doing this? Look, that is because just two players, Google Pay and PhonePe, together control 85% of India's UPI market. There is also concentration risk. If one app goes down, there will be a lot of disruption despite the fact that UPI payments are interoperable. Also, both Google Pay and PhonePe are owned by foreign entities. Google Pay is owned by Google, which is registered in the US, and PhonePe is owned by Walmart, which is also based in the US. Now, this means US-based companies indirectly control 85% of UPI payments in India. Therefore, the government wants to promote more competition in the UPI space by limiting the market share to 30% of the total UPI volumes in one quarter. Now, how will the market share be enforced? Well, Google Pay and PhonePe will have to stop accepting new users and start rejecting payments. Or an alternative to that is that a new app suddenly becomes really large, but that, practically speaking, is improbable. Hypothetically though, if regulations do become applicable, PhonePe will be the worst hit company since they have about a 50% market share in UPI. What is worse for PhonePe is that they very recently turned operationally profitable and they are looking to go IPO. But this entire market share cap confusion seems to be throwing water on their ambitious plans of going IPO. Talking about PhonePe's IPO plans, their founder Sameer Nigam said, and I quote, "We cannot go public if there is uncertainty on the regulatory side. If you are buying a share at 100 rupees and you price it assuming we have 48-49% market share, then there is an uncertainty about whether it will come down to 30% and by when. Now, the weirdest thing here is that even though the government is doing all this to increase competition and help new players grow, these rules might actually be doing exactly the opposite. Think about it. If there is so much of uncertainty around the rules and regulations surrounding a particular industry, new players are obviously bound to be very careful before investing big in the space, right? Also, UPI payments are free today, and it is very, very hard for companies to make money off it unless they can use UPI as an acquisition funnel for other businesses. Hopefully, the situation resolves itself because we need more companies like PhonePe to IPO. Without such new age companies listing out, markets will never deepen and offer investors exposure to new age interest narrative businesses. Now, given that the deadline is just a few months away now, it'll be very interesting to see how all of this shapes up. Moving on to the last story of the day, let's talk about the WazirX hack and what's happening with it now. If you remember last month, a massive crypto attack took place with one of the biggest cryptocurrency exchanges in India, WazirX. That attack resulted in the theft of approximately $230 million worth of digital assets from WazirX's platform, and it made it one of the largest crypto thefts in the entire world. WazirX then acknowledged the issue and temporarily suspended all withdrawals to protect its users' assets. After a few days, they announced a socialized loss strategy to solve this issue. In this, they decided to distribute the entire financial impact of the $230 million across all its users, irrespective of whether or not they were affected by the attack. This attack not only affected individual crypto investors but also corporates. CoinSwitch, which is another leading crypto exchange in India, reported that approximately 1% of their platform's total assets have gotten stuck on WazirX's platform due to the hack. They claim that they tried multiple times to recover the amount but failed at it every single time. So they recently decided to sue WazirX. By the way, over here, in case you're wondering why CoinSwitch had exposure to WazirX in the first place, it is to ensure a backup to maintain seamless transactions for users just in case there is a downtime or an unforeseen error with the platform. In CoinSwitch's case, they held about 7% of their liquidity on other crypto exchanges for this purpose. In a statement released recently, CoinSwitch said, and I quote, "It has been over a month since WazirX, a major crypto exchange operating in India, claimed that a cyber attack on their platform led to the theft of $230 million, which is approximately 2,000 crore rupees worth of funds. We have attempted to be in regular touch with WazirX since the day of the incident, but have not been able to reach a solution to recover the funds that are stuck on their platform." Further, their announcement earlier this week is unclear about how a full recovery would happen. Now, in response to this entire crisis, Zetai Limited, which is the Singapore-based holding company for WazirX, filed for a moratorium in the Singapore High Court. But what does this actually mean, you might be wondering? Look, this legal move gives Zetai a 30-day breather. During this time, they are protected from any legal actions without the court's approval. In a way, this gives them some extra time to figure out how to reorganize their finances to get out of this situation. By the way, this is a very common strategy for companies that are facing financial troubles. For WazirX users and crypto investors in India, this is something definitely to keep an eye on. But we'll still have to wait and see what happens next. More on this as and when more information is available. That's all the news and information I have for you today. I hope you found value in this episode. I'll see you tomorrow. Take care and goodbye.